Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings and business news. And today we're diving deep into Ubiquiti Incorporated's latest proxy statement. This isn't just any shareholder meeting invitation, folks. This is where the company lays out the big talking points, the decisions being made, and how your money is being managed. Let's get straight into Ubiquiti Incorporated's 2025 proxy statement. Think of this as the company's annual report card and roadmap all rolled into one, sent straight to the shareholders. The big news is the upcoming 2025 annual meeting of stockholders, happening virtually on the 4th of December 2025. This is where shareholders get to weigh in on important matters. First up, they're holding an election for a Class 2 director. This is like choosing a captain for a specific leg of the ship's journey. They're putting forward Ronald Sege for this role, and the board is really recommending you vote for him. Sege has a ton of experience, including time as CEO of Echelon Corporation and 3 Gong Corporation. And even a stint at Leica's way back when. Basically, he has seen the tech world evolve from its early days, which could be super valuable for guiding the company. Next, they're asking shareholders to ratify the appointment of KPMG as their independent auditors for the fiscal year ending the 30th of June 2026. This is a standard but crucial step. It means an outside firm is checking the company's financial books to make sure everything is on the up and up. KPMG has been their auditor since at least fiscal year 2017, so there is a long-standing relationship there. Now, about those auditors KPMG for fiscal year 2025, Ubiquiti paid them $2,638,000 for audit fees. That is up a bit from $2,557,000 in fiscal year 2024. It is important to note that these fees are for the audit itself and related services, and they've already been approved by the audit committee. No other fees like tax or consulting were billed by KPMG. While audit fees are expected to increase as the company grows, it is always worth keeping an eye on the auditor's independence and the value they provide. Let's talk about executive compensation. This is where things get really interesting. The named executive officers are Robert J. Pera, the CEO and chairman, and Kevin Radigan, the chief accounting and finance officer. For fiscal year 2025, Robert Pera's total compensation was $630,709. This primarily reflects the incremental cost for his personal use of the company airplane, which is considered a security measure due to a bona fide business-oriented security concern. He receives no salary from the company as he holds a majority of the outstanding common stock. Kevin Radigan, on the other hand, earned a salary of $500,000 in fiscal 2025, along with a $100,000 bonus and stock awards valued at $227,900. His total compensation for fiscal 2025 came out to $831,475. A hot topic in these reports is the CEO to median employee pay ratio. For fiscal year 2025, Ubiquiti's CEO to median employee pay ratio is approximately 8.83 to 1. This means the CEO's compensation, which is largely tied to the company airplane's operating costs in this case, is about 8.83 times that of the median employee, whose total compensation was $71,435. It is important to remember that the CEO's compensation here is heavily influenced by the security measure of the airplane use, not a traditional salary. This ratio is calculated based on specific seat rules, and direct comparisons to other companies should be made with caution. The pay versus performance table is a really important one. It aims to show how executive compensation actually paid relates to the company's financial performance over the last 5 years. For Ubiquiti, the figures show that compensation actually paid to the paydo, Robert Pera, remained consistent at $630,709 for fiscal 2025. Reflecting the airplane usage and did not significantly fluctuate based on stock price or performance. For Kevin Radigan, the compensation actually paid averaged around $1,650,146 in fiscal 2025. However, looking at the table, this figure for Radigan and for the average of non-PO NEOs seems to jump significantly in fiscal 2025 compared to prior years. For instance, it was $689,803 in 2024 and $752,445 in 2023. This jump might be due to adjustments in how equity awards are valued or recognized under the specific pay versus performance rules. The average compensation actually paid for non-PO NEO spiked to $1,650,146 in 2025. This contrasts with $689,803 in 2024 and $752,445 in 2023. These significant year-over-year increases warrant a closer look at the underlying accounting adjustments. Specifically, The table shows a significant increase in fair value at fiscal year end of outstanding and unvested stock awards, and option awards granted in fiscal year, and change in fair value of outstanding and unvested stock awards, and option awards granted in prior fiscal years. This often means that while the cash and base salary might be stable, the value of equity awards as measured by accounting rules has increased significantly, likely due to stock price appreciation. When we look at the actual financial performance metrics against executive compensation, it gets even more interesting for fiscal 2025. The company's net income was $711,922,000. This is a substantial profit. However, the compensation actually paid to the named executive officers, particularly Radigan, appears to have increased substantially in 2025. The relationship between this increase in executive compensation and the company's net income looks somewhat disconnected when viewed solely through this table, especially when compared to prior years where the compensation figures were lower and closer to reported net income changes. It suggests that the compensation is heavily influenced by equity award valuations, rather than direct short-term performance metrics like net income. Ubiquiti has an equity compensation plan, the 2020 plan, which has been approved by shareholders. As of the 30th of June 2025, there were 100,064 securities to be issued upon exercise of outstanding options, warrants and rights, all of which were ASAs or restricted stock units. Importantly, there were no outstanding options under this plan. However, a substantial 48,487,42 securities remained available for future issuance. This shows an ongoing reliance on equity, likely RSUs to incentivize employees and executives. When we look at related party transactions, we see Ubiquiti's CEO, Robert J. Pera, is also the controlling owner of a basketball team. The Memphis Grizzlies. The Grizzlies have purchased Ubiquiti products through their web store, with sales reaching about $270,000 in fiscal 2025. These transactions are stated to be on terms no less favorable than those offered to unaffiliated third parties. While these are disclosed, any transaction involving significant owners needs careful scrutiny to ensure fair dealings for all shareholders, though these amounts seem minor in the grand scheme of Ubiquiti's overall business. Now for the ownership breakdown, Robert J. Pera, the CEO, is by far the largest shareholder, beneficially owning a staggering 56,278,181 shares of common stock as of the 17th of October, 2025. This translates to a massive 93% ownership stake. This is critical context. When the CEO is the majority owner, their interests are very closely aligned with the company's success, which can be a huge strength. It means decisions are likely made with the long-term value of their own investment at heart. Collectively, all directors and executive officers own about 93.1% of the company. That is an incredibly high percentage of insider ownership, indicating strong conviction from those running the company about its future prospects. This level of ownership can provide stability and ensure management is focused on shareholder value creation, at least from their own perspective. So, what does all this mean for Ubiquiti? On the positive side, the company's financial performance, as indicated by substantial net income, appears strong. The massive insider ownership, especially by the CEO, suggests a deep commitment and alignment of interests. This can be a powerful driver for long-term strategy and stability. The company is also relying on equity awards, mostly RSUs, which is a common and generally effective way to retain talent and align their interests with shareholders. However, there are areas that warrant a closer look. The compensation actually paid figures versus reported net income in the pay versus performance table show a disconnect, heavily influenced by equity award valuations. While this is complex and subject to accounting rules, it's worth understanding how executive compensation truly ties to actual business performance year over year. The significant jump in one executive's compensation calculation in 2025 needs careful consideration by investors when assessing the overall compensation structure. The company's direction seems to be one of continued growth, as evidenced by the ongoing equity awards and the focus on director nominations. The reliance on a strong, experienced board, like the nominated Mr. Sege, is also a positive sign. The virtual meeting format, while practical for access, does remove the direct interaction that an in-person meeting might offer. So shareholders should ensure they exercise their voting rights effectively. Overall, Ubiquiti Inc. appears to be a company with a strong leadership core, substantial financial results, and a clear focus on its future direction. The high insider ownership is a significant positive. However, investors should always dig into the details of executive compensation and understand how it is calculated, especially when accounting adjustments can create large swings in reported figures. For now, based on these filings, the company is navigating its path with a clear vision driven by a leadership team that is heavily invested in its success. Alright, That is our breakdown of Ubiquiti's latest proxy filing. What is your take on these numbers and what they signal for the company's future? Do you see the executive compensation rise as a concern or a reflection of growth? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into the corporate world. And hey, if you want to connect with other like-minded individuals and discuss these findings further, don't forget to join our Discord community. The link is in the description. Thanks for watching. See you next time.